Hey everybody, this is Jim at SP500chart.com. It is Sunday, not around noon. It's actually closer to 11 a.m. here on the East Coast. And got in my flight kind of late last night from the West Coast. It's good to be back home. I am going to be doing a little bit more traveling in the upcoming week, but I don't see anything that would preclude me from getting the video updates done every day. Some of them may be late. I'm working in the Central Time Zone, and we'll probably be finishing up each day around 7 or 8 o'clock Central Time. So that means I'll get back to the hotel around 8:39, and the video will be up around 11 to 11:30 p.m. Eastern Time. So thanks for bearing with me on that. Before we take a look at the weekly review and what took place on Friday, let me remind you, as I always have to, that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am still not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're looking at a 2-hour chart here because I think this shows us a little bit more of the breadth of what we have been dealing with and what we have been looking at. And basically, if you've been, I think almost everybody I don't think I've gotten any new members in the past 2 days, so you know that we've been looking at this potential inverted head and shoulders pattern right here. This would have, and I'm saying would have been because I don't think this is what this pattern's going to be. We could end up kind of restoring its effect, but it at this point I'm not comfortable in saying this is an inverted head and shoulders pattern because it has lost the shape. Okay, but had it been, we would have had a left shoulder, a head, and a right shoulder. Instead, when we got up to this neckline 2 weeks ago, we started an immediate sell-off that took us well below the previous potential right shoulder level and actually got down very close to the levels that we were seeing down here at the formation of the head. Now, not super close, but within about 1%. So I'm looking at this now. I'm saying exactly what the chart says, and that is the market is in a period of indecision. And frankly, that's what these patterns are. It's just that usually the classical head and shoulders top or inverted head and shoulders continuation pattern, which is what this would have been, or a head and shoulders bottom, typically they are moments of indecision where things stop. You weed some sellers out or buy. You get what I'm saying. You go up, then you pause, form a pattern that has a predictive quality to it. And then you get on about your business. But we sold off fairly heavily off of that last tag around 2020. As a matter of fact, sold off, if we look at this on an hourly chart, here was our high at, let's call it 2018, and here was our low at 1926. So we're looking at about a 92-point swing within a matter of 2 weeks. Now, 92 points sounds pretty severe, but I'll remind you that starting at 2020, 92 points is a total of about a little bit more than 4%, about 4.5%. So the question, when we came into the week, if we now examine the weekly review part of this, we knew that we had broken our short-term trend line right here, which was between these two red parallel lines. We knew that. That happened actually Monday a week ago. But coming into this week, we were looking at bouncing on a support line right here, which indeed we did do. And we had this line drawn on the chart with the idea that whenever the S&P gets over this line, we will mount an attack back on this neckline. Much in much the same way we had said a few weeks earlier, once we get over the green line, we'll mount an attack on this neckline. Well, really, we didn't get over that line. There was also, I pointed out earlier in the week that we were in this kind of rectangular area of consolidation, that if we break out of it, we would be looking at a minimum move to about 2010, but if we broke down out of it, we would be looking at a minimum move of about 1940. Obviously, we broke down, and we broke down, I think, the next day, and to more than just 1940, we broke down all the way into the mid-1920s. If there is something maybe that's kind of good that happened, was we had a sharp rebound Thursday morning. We also had selling pressure adequate to actually take us at least for an hour or so lower than our descending support line. And I'll remind you, this support line was descending at a pretty good clip. So what does that mean? Well, I think it may mean that we saw some longs kind of throw in the towel here. And that is often a sign that a bottom is being put in. So let's keep our fingers crossed. We had been looking at the trading for the last month or so as being constrained between these two blue lines right here, and that worked until Wednesday and Thursday. Now, the question is, does this pattern still hold valid? Well, for sure. I think the upper resistance line is still valid. Okay? Because that has been 1, 2, 3, 4, including Friday's touch, 5 touches on this, without a significant break above this line. Now we did get just a little bit over it on Friday. Is that a harbinger of good things to come on Monday? I think it's too early to tell. We really need to get up and over this thing. And I think we're probably going to be setting up another resistance line, if you ask me, at the top of this rectangle at around 1985. Let's see how that develops. I guess what I could do is I'll just slide this box on over, and we'll see what happens with relation to that little horizontal range that we set up, the 25th through the 30th. So, if this little set of blue lines does act like a descending wedge, and this was just a sort of a couple of days of anomalous trading, then we should be coming back up to this neckline. If this pattern works like a wedge, of course, that also means we need to break out above this top line. Interesting to note. I had snapped this little, what do I call that, the midline between these two lines that define the wedge. I had done that to see if there appeared to be any technically significant areas in and around this line, and I think the answer is it sort of looks like there are. So, matter of fact, when we came back up into that middle area again on Friday, we broke above it and then came back for a little back test before we started to move back up. You could just look at this and count a number of tags on this midline, like 1, 2, 3, 4, 5, 6, 7, 8, now 9. We don't have a whole bunch of examples. We just got a few examples of coming up to it from underneath and getting turned back down. For the most part, this line has been acting as support once we get over it. So it'll be an interesting week. Now, I'm not gonna put much faith in the next thing I'm going to mention. By the way, it's interesting how this descending wedge pattern sort of morphed into a descending broadening pattern, which is frankly, according to John McGee, who co-authored Edwards and McGee's technical analysis of stock trends, he says you don't see very many descending broadening patterns. So it's interesting that we sort of got that for the last 2 weeks. What I was getting ready to say, however, is if we end up with a resistance level up here at about 1985 or so, then I think you see where I'm going. It would not surprise me if we were to tag this line. That would mean we would break out over our descending wedge pattern. And if we were to come back for a back test of that line, then get back up to business, then what we would have seen over the past 7 days or so could be the beginning of a formation of another inverted head and shoulders pattern. You know, I'm not going to quite be as bold about that as I was the last time, because the last time we saw that pattern, I'll remind you, here it is, boom, boom, boom. It obviously did not work out according to my script, but still, you see what I'm seeing here? I'm seeing a dip up to resistance. I'm seeing a bigger dip, a significant dip, down to some, frankly, unspecified area of support. And I say that because there was no real trendline reason to expect 1926 to be support. But now I see a good 40-point move off of that, and if we get a little follow through, another dip, and then break through 1985, that could be what we're dealing with. Let's just kind of put that in light pencil notes on the chart. If we zoom in and try to get any kind of sense out of the 3-minute chart, I'll be honest with you, it doesn't look particularly bullish. It looks like we could be setting up a something of weakness, perhaps on the open. The only thing is we are over this blue line by just a tiny bit. And the reason I say it doesn't look particularly bullish is because, well, for one thing, we had a very short-term trend line right here that did break. Okay, but I want to stress very short term, and this line is also at running up at a very, very aggressive clip, and it would be unreasonable to expect that to have held out, because that would have meant that on Monday we would have closed up 38 points. That's just unrealistic. So that is a reason why you might expect some weakness, but I suspect that the weakness that you might see, if we have reversed here, then the weakness that you might see would probably end up simply establishing a more legitimate point that we could work off for a workable and reasonable rising support line. Finally, the other thing that happened during the week that I felt pretty good about is we did point out the possibility of a small inverted head and shoulders pattern that formed late on the 1st and through the 2nd. We pointed that out at the end of the day on the 2nd, and that is exactly what appears to have happened. So that was a very good call. And we're over this shorter term trend line right here, this little gray line that was working for about 3 days. So there's reasons to be I think, bullish about where we go from here, but I think you should temper that with the fact that we are still stuck with a market that is in a period of indecision. And frankly, the decision will not be made, I don't think, in a significant way until one of two things happens. And the first is this higher hurdle up here over in the mid 2020s, currently at about 2026. That obviously is a longer term resistance line. If we get over that, then I think a new leg up over 2100 should be a given, as close to a given as the market will ever give you. The second one is if we end up forming a smaller inverted head and shoulders pattern right here with a neckline at 1985, then that could be giving us a little bit of an advance signal. Because again, just hypothetically, if this is what we end up with here, then we would know what to expect once we break over 1985. Again, provided we get that little right shoulder, and we measure that from the depth of the head, from that neckline. Here we go. So we know once we get over 1985 if we are indeed dealing with an inverted head and shoulders pattern that does a little completion this week and then breaks out. That tells us we should be getting over that purple neckline. So it's a little bit of it would be a little bit of a nesting of patterns. We'd have this really small inverted head and shoulders down here. We would potentially have a slightly larger inverted head and shoulders over here. And then on a 15-minute chart, we may even end up with an even larger inverted head and shoulders pattern that makes up the entire right shoulder. Okay, we could go all the way back to the left side of this chart here and say left shoulder, head, right shoulder. That is an even larger, and then there's the even larger inverted head and shoulders pattern that frankly I don't think is anymore. So what it looks to me is that maybe we formed an inverted head and shoulders over here, couldn't quite do the neckline thing, so now maybe we're just making another one because this one wasn't quite ripe enough to break out and get over this neckline. So it'll be very interesting going forward. Finally, I want to do just one more thing before I let you guys go, because I know I have a tendency to talk my head off when I do these. If we take our neckline right here, I said there was no no trend line down here that said we should bounce it in the mid-1920s, but there is something I discovered over the weekend. If we take our neckline and create a parallel line, and let's just make it a different color so it stands out. We'll make it a bright green. And again, that's parallel to the neckline. And we stick it down here off of the previous low, the week of August 4th, it matches up pretty close with where we set our low on this past week on Thursday. So guys, let's just see what happens going forward. I think we have. I have a fairly positive outlook now. As we were trading significantly underneath 1940, I'll be honest with you, I was about ready to say, you know, this may be it. We may be coming down to take out this long-term support line. But now I'm not quite so sure about that. Finally, we did break this red line that we've been talking about for a while as a support line that had been working since January of 2013, but we broke it for one day. It's been broken for one day before. As a matter of fact, maybe even a couple of times, depending upon how you try to make all of these little data points line up, because they don't line up perfectly. So if we can continue to recover here, we are once again above this line. So I'm not quite as concerned about that at this point as I was as we were trading under 1930 momentarily this past week. So it's good that we're back above this line. Guys, I'm going to let that be the video and the weekly review for the week ending October 3rd, 2014. I appreciate you taking time out of your day to watch this. Thank you for your support. And I tell you what, it sure feels good to kind of have my voice back. So thanks for watching. Take care.